Hi, Assalamualaikum. Today, we will present the incoherent in accounting for goodwill implication for a revision of international accounting standard. Our group member consists of Akila Arfa, Muhammad Ahsan, Siti Shahada, and Sultan Nisa. Basically, all these topics will be covered in this presentation. First, as the introduction, the transition toward a knowledge-based economy, the Accounting Standard Board had to overcome several problems relating to the identification, measurement, and control of intangible assets such as goodwill. The main literature by a few scholars have focused on the intrinsic meaning of goodwill and its accounting treatment, such as the initial recognition of goodwill, its amortization, impairment, compliance with disclosure, relationship with market, and method and approaches to determine goodwill book value. There are still unresolved issues related to intrinsic nature and specifically its recognition and duration that need to be overcome by the scholars. Should internally generated goodwill be recognized, and consequently, when recognized, should goodwill be amortized? In order to do so, EFRAG, OIC, ASBJ have provided research on amortization of goodwill. IASB revamped IFRS 3 specifically on the alternative approaches for subsequent accounting for acquired goodwill. Secondly, on the theoretical background. First, intangible theory. It can be considered as the sum of all intangible assets that cannot be specifically identified. Each asset is broken down into its component, to which are then attributed a specific value that is intended to be part of the value of the enterprise as a whole. Secondly, the super profit theory proposed a decreasing discounting process over a limited period of time that corresponds to the useful life of goodwill. Subsequently, super profit theory could not last forever, and the past is no sure guide to the future. Thirdly, the synergy theory of goodwill is related to those business value and business strategy that represent a greater value that held by the firm. Therefore, going concern, goodwill and combination goodwill has been evolved. Overall, these three theories provide complementary contribution to accounting for goodwill. The first two theories of goodwill could not be specifically identified, cannot last forever, while the synergy theory has directed the evolution of the goodwill concept as the premium paid for the business during an acquisition process, with synergies in the form of future revenue, cost reduction, and lower cost of capital. Some scholars mention that goodwill should not be recognized at all. Others argue it should be systematically amortized over a reasonable period of time in accordance with the principle of matching cost with income. Others also recommend that goodwill does not arise just from business combination but also through internal generation process. The third part of this presentation is the treatment of goodwill under IAS. In the International Accounting Standard, the accounting for goodwill is addressed by IFRS 3, IAS 36, and IAS 38. According to IFRS 3, goodwill is measured initially, indirectly, as the difference between the consideration transferred. In this IFRS, it stated that goodwill composed of going concern element of the acquired business and expected synergy from combining the acquired business. IASB conclude that goodwill meet the conceptual definition of asset. IAS 38 define goodwill as an asset representing the future economic benefit arising from other assets acquired in a business combination. It is actually in line with IFRS 3 regarding synergy is created from business combination. We use acquisition method to calculate goodwill. By using this method, we need to know the fair value of the consideration transfer and the net asset. After we deduct, when the value is positive, it is a goodwill. So, subsequent impairment test is needed. But if the value is negative, we consider it as a bargain purchase and put in the income statement. Amortization system has been abolished after the revision of IAS 36. Goodwill need to be tested for impairment in order to know the recoverable amount. Recoverable amount is the highest between fair value less cost to sell and the value of asset in use. If recoverable value is less than carrying amount, intangible asset must be impaired. There are two arguments for goodwill. First, goodwill can only be recognized if purchased as part of takeover. We cannot recognize goodwill if it is internally generated goodwill because it is difficult to compare with the purchase price of the goodwill. Second, goodwill should not be amortized, but we need to conduct annual impairment test because it provides better information.